Hello everyone, my name is Sergio Solano. I am the founder and creator of Valinity, and in this video we're going to do a deep dive into the project. We're going to talk about everything from tokenomics, advantages, securities, risks, and even how to use the platform itself. But before we jump into that, if you don't have at least the minimum knowledge of what Bitcoin and Ethereum is, I recommend you to go to YouTube and watch some videos before you jump into Valinity. I think it's very important that you know at least what the blockchain is and how smart contracts work, since Valinity utilizes these things within its ecosystem. Now, for the people that are going to stick around and watch the video, please take notes, watch the video very carefully, rewatch it as many times as you need to. It's very important that you understand the ecosystem completely. I always say never invest your hard-earned money into something that you don't understand completely, right? So now, saying all that, we're gonna jump right into it. Bear with me. I'm pretty new doing these videos, and I'm bilingual, so I might get mixed up in a couple words, but just bear with me, all right? Let's get started. I actually want to start with the basis, fundamentals of Valinity, which is its tokenomics. Before we jump into all this good stuff, the advantages of Valinity, I would rather start with the basis, right? The fundamentals, which is tokenomics. Now, Valinity is 100% based on smart contracts. If you don't know what smart contracts are, smart contracts is open code. It's open code that anyone can see. By just clicking on the smart contract, you can see that this is open code that anyone can audit, or a company can audit, to make sure that it works, that it does exactly what we say it does, and it cannot be manipulated after it's already on the Ethereum network. So that, to me, is the true value of Ethereum. One, transparency, right? That everyone can see the code, everyone can see what this smart contract function is. And second is that it cannot be manipulated after it's live on the Ethereum network, right? So the whole ecosystem is built on this non-changeable, completely decentralized code, right? And there's 3 smart contracts that sustain the whole Valinity ecosystem. The first smart contract is called the Valinity Acquisition Treasury. This is the smart contract that can mint Valinity. This is the only way that the Valinity token can come into existence, right? And also is the receiver of all the transaction fees within the ecosystem. So interest from loans, transaction fees, all this is charged in V and sent back to the Valinity Acquisition Treasury, right? So it's the minter and the recipient of all of the fees. Now, the validity that this ecosystem, this smart contract has, either through minting or through fees, is sold to the market, and that liquidity from that sale is used to acquire the asset that we want. In this case, let's just talk about Ethereum to keep it simple. And that Ethereum is sent to our reserve treasury, into our smart contract called the Valinity Reserve Treasury. That Ethereum is locked here, right? So right now we can go to the contract and see right now it has 114 Ethereums. These Ethereums are locked here and can only be accessed through collateral loans, through Valinity holders, right? Collateralizing their tokens in the Valinity collateral treasury, and from there receiving loans in Ethereum from the Valinity Reserve Treasury. So we can see right now in the collateral treasury, we can go see and we have right now 11.6 million tokens collateralized for loans, right? So very simple. First smart contract that mints Valinity sold in the market to buy the asset that we want, Ethereum. The Ethereum is locked here and only accessible through loans, collateralizing your tokens in the collateral treasury. Now, when your tokens are collateralized here, they have an interest fee from these loans. That interest fee is 1% and charged in the Valinity from the Valinity collateral and sent back to the Valinity Acquisition Treasury with the 2% transaction fees. Every time that users buy and sell the Valinity token in any exchange or transfer it between each other, has a 2% fee that's also sent here. So when you see it, it's a cycle that is continuously acquiring more Ethereum to back our token. So we have the first smart contract that mints V, sells it in the market. With that liquidity, buys Ethereum, locks it in our smart contract. That Ethereum is only accessible by loans collateralizing their Valinity or their V in the collateral treasury. And then from here, interest is charged from these loans in V, from the collateralized V, and sent back to the acquisition treasury along with every transaction fee, that 2% buying or selling or transferring from one wallet to the other, sent back here to be resold and buy more Ethereum, put it into a reserve, and just keep doing the cycle, right? This cycle, every single transaction is just acquiring more Ethereum to back our token. Every single transaction, right? Now, we know how much Ethereum can you get from each token by collateralizing. Now let's go up here to where it says the formula. The formula is very simple, is that we get all the amounts of Ethereum that's in our ecosystem, that right now is 1,448 and 49 Ethereums, right? And we divide it by all the coins in circulation. So right now we have 12.5 million coins in circulation, and you get the amount of Ethereum that's backing each token, the amount of Ethereum that you can access through loans of each token. And as we know, every single transaction, it's either acquiring more Ethereum, right? When capital comes in, the acquisition treasury sells and buys Ethereum, put in our reserve, or coins are going out of circulation through interest and transaction fees. So it's either the amount of asset is growing or the amount of coins in circulation is decreasing. It's deflationary. It's a deflationary ecosystem. And that creates that the amount of Ethereum that's backing each coin is continuously growing. So for example, you can see in August, the amount of Ethereum that's backing each coin was 0.000109. At the end of August ended up being 111, September 112, October 114, November 115, and now in December we're 116, right? So every single transaction, either interest from loans, transaction fees, taking coins out of circulation, or adding more Ethereum to our ecosystem, that's basically just growing the amount of Ethereum that's backing each token, right? Now, if you followed me until now, you're able to understand what's the Valinity effect, what's the final effect, right? Now, I want to draw your attention to this gold line in the bottom. This represents the amount of Ethereum that's backing each coin, or the amount of Ethereum they can get as a loan. So the LTV, the loan to value, the loan to V, right? Now, in the top, you have the gold line that represents what price V needs to get to so that Valinity acquisition treasury triggers a sell to acquire more Ethereum, right? And it's always double the price of the LTV or the floor price, however you want to call it, right? Now, every time that acquires more Ethereum, it acquires more Ethereum per token. So the amount of Ethereum back in each coin grows, right? And every single transaction in the ecosystem through interest from loans or transaction fees is taking them out of circulation to acquire more Ethereum, so this line grows. So the amount of Ethereum back in each token, as we know from now, is continuously growing through each transaction. When this grows, also the value that V needs to get to trigger a sell grows as well. And the market buys and sells between these two unlimited liquidity points. It's unlimited liquidity for Ethereum, for Valinity to be minted, and it's unlimited of liquidity for Ethereum to get as a loan. But as you can see, it's always to the upside, because this floor, this LTV is just continuously growing, right? So that's the final Valinity effect, that is continuously growing to the upside against the asset that we have, right, in our reserve. Now that we understand that, let's go into the advantages of the ecosystem. The first advantage is price performance. So right now, the ecosystem, since May 31st, 2023 till today, the time of this recording, December 29th, 2024, the ecosystem has only acquired Ethereum. This is for the simple reason that we wanted to test out that the ecosystem behaves as it is designed to with only one asset before we start adding other assets into our reserve. And as you can see from this data, the Valinity price follows very closely the price performance of Ethereum, right? But if you pay close attention and you see the separation between the two assets, it's getting thicker and thicker and thicker through time. That's for the simple reason that each coin is continuously acquiring more Ethereum to back it. So just to give a quick example, let's say in one hand you had one Ethereum, in the other hand you had one Valinity backed by one Ethereum, just for the example. They will move in price very similar. But since each Valinity now is backed by 1.1 Ethereums, 1.2 Ethereums, 1.3, 1.4 Ethereums, 1.5 Ethereums through each single transaction, now they're fluctuating very similar, but that gap is just getting bigger and bigger to the upside. So the first big advantage of Valinity is price performance. It's always going to outpace the price performance of the asset that we have in our reserve, in this case, Ethereum, right? That's the first main advantage, is price performance. The second main advantage is collateral loans, right? But these are not regular collateral loans from like other platforms. This is the first and only ecosystem that can give you collateral loans without the risk of liquidation, with no due dates or risk of liquidation. And the reason for that is because what you're accessing as a loan is the actual backing of each Valinity. So for those people that know about other protocols that give you loans on your crypto, for example, like Aave, CoinRabbit, Nexo, etc., you're able to collateralize a crypto, let's say Bitcoin right now is worth at $100,000. You're able to collateralize your Bitcoin and you're able to get a percentage of the value as a loan. So for example, let's say it's 70%. You choose to get 70% of the value of your loan. It's you're able to get $70,000 for each Bitcoin that you collateralize. But if Bitcoin drops close to the $70,000, the protocol will automatically sell your Bitcoin to guarantee the $70,000 that they loaned you, right? That's usually in a stable coin. And Valinity, since you're not getting a loan from a third party, you're actually just getting the amount of Ethereum from a smart contract that's backing your tokens. There's no risk of liquidation. Doesn't matter how the price fluctuates, you will never get liquidated. So that's huge, right? Imagine those people that had Bitcoin at $1,000 and they had to sell it for X or Y reason because they needed liquidity, right? And now they're seeing that of Bitcoin at $100,000. Or those people that got liquidated, that's even worse. Now with Valinity, you're able to still hold your appreciating asset V at the same time being able to access liquidity without the fear that's going to get liquidated. Now, the second advantage of these collateral loans is that meanwhile the ecosystem keeps on growing and keeps acquiring more and more and more Ethereum, you're able to refinance your loans and get the difference, right? So you're able to consistently access more capital. So for example, let's say in August, you got a loan for each coin, you got 0.000109, right? And now it's 0.00116. You're able to get the difference. You just refinance the loan and you get that difference. So not only you're able to get a collateral loan and get liquidity right away as soon as you want to, but meanwhile the ecosystem keeps on growing, you're able to refinance, accessing more capital. So you get the best of both worlds. You get a consistently growing asset, and at the same time you're able to enjoy and get the liquidity without having to time the market, when to sell, when to buy, etc. Right? Now, those are the two main advantages of the ecosystem: is price performance, because we're not only benefiting from the price performance of our asset, which is Ethereum. If Ethereum goes up, we also go up, but we're also outpacing them for the simple reason of what we explained. Every single transaction is just acquiring more of that asset per coin. But at the same time, we're able to access liquidity without the risk of liquidation or due dates. But for me, the biggest advantage is the following. The biggest advantage of Valinity to me is that we have a floor price, a price that the coin can never go under, for the simple reason that we have this amount of asset that's backing each coin. So for example, right now, Valinity is sitting around 54 cents, right? We had a huge retracement, which is great for this video because we're able to explain how the floor price works. We have a price of 54 in the market, and let's say it keeps retracing and it gets all the way to 40 cents. Why is this the floor price? Because the market's able to buy it at 40 cents and right away collateralize it and get a loan of 40 cents. It means you're able to hold V risk-free. You're able to put in 40 cents per token, right away take it to our ecosystem, get a loan of those 40 cents, and you hold the V risk-free. That means the market will never let it go under that floor price. And since we know every single transaction is just increasing this floor price, it's a floor price that always is going up. Now, pay close attention. This floor price is in Ethereum. So if Ethereum goes down, of course, this value is going to go down. But if Ethereum goes up, the value is also going to go up, right? So that's the biggest advantage, that you're able to calculate your risk. So for example, right now, you're able to buy Valinity at 54 cents and you're able to get a loan, or the amount of Ethereum back in each coin right now is 40 cents. So you're at risk around 30 cents, right? So a quick strategy, what you could do is buy Valinity at 54 cents, right? You know that the amount of Ethereum that's backing it at 40. If Ethereum goes up 30%, it's already, that this loan that you're able to get, it's already at 54%, 54 cents, sorry. So it means that you're able to get that loan at 54 cents, cash it out to USDT or USDC, any stable coin. That means you're already risk free. You already got your 100% of your capital that you invested in, and you still hold the token. So if Ethereum keeps on growing and Valinity being backed by Ethereum is going to keep on growing at the same time, you're able to still be in the market and taking away risk, taking away profits without having to time the market. That's just one quick strategy. There's many strategies on how to use the ecosystem, but I'm going to leave that for further videos. And you can also go to our Valinity helper. There's a option there to book a call directly with me where I do exclusive little calls so I can answer questions and concerns, and I explain all the different strategies. Okay, let's keep on going. Now, what we see here before we go to that, when we're able to understand the tokenomics, we're able to understand the advantages. What is really Valinity? Valinity to me is the first of its kind, completely decentralized bank-like ecosystem. And the difference of this decentralized bank-like ecosystem is that you can hold V, the Valinity token, and you become a shareholder or a co-owner of this decentralized bank-like ecosystem. And you benefit within everything in the ecosystem, from interest from loans, transaction fees, and appreciation of the assets in our reserve go directly to the valorization of V. What is the main advantage of its first of its kind bank-like ecosystem? Here we name a few. So in traditional banks, users hold depreciating fiat currency, right? Like the USD dollar, like peso. And we know that all these currencies are losing their purchasing power thanks to hyperinflation, right? But in Valinity, holders are holding strong appreciating assets like Ethereum and very soon Bitcoin and gold, right? Now, traditional banks, also interest from loans and transaction fees go directly to corporate profit, while in Valinity, the interest from loans and transaction fees go directly to the valorization of V that benefits everyone equally. But the biggest advantage is that Valinity is 100% decentralized. It means that no government or no bank or no third party can freeze your account, can deny you your funds, can put limit to your withdrawals, because only you have access to your V and the underlying assets, right? And Valinity being on the Ethereum blockchain, it means it has no downtime, right? And it's accessible by anyone, anywhere, anytime. While traditional banks are restricted to the countries that they operate in, right? So this is a few of many advantages of Valinity, right? Compared to traditional banks. Valinity is to crypto, to Bitcoin and Ethereum, to what traditional banks is to fiat and depreciating currencies, right? So now I want to talk about when Valinity, depending on when you're seeing this video, Valinity probably has already opened up his ecosystem to start acquiring other assets, right? The community can choose what assets to start acquiring, and depends on a 70% governance vote. If that passes, then it'll start acquiring those assets. But the first assets to go to voting to start acquiring, it will be Bitcoin, wrapped Bitcoin on the Ethereum network, right? And PaxG, which is a token backed by 1 ounce of gold, right? So now the ecosystem is not only going to start keep acquiring Ethereum, how it's done up to now, but it'll also start acquiring Bitcoin and gold. Now this starts opening up more advantages to the ecosystem. The first advantage is that by just holding V, now you're holding a more diversified portfolio, right? That has a lot of advantages. The first advantage is that Bitcoin and Ethereum will help Valinity grow through bull markets that we know happens every 4 years. And gold will help Valinity sustain its price, or at least not fall so fast like other cryptocurrencies in bear markets, right? So you're getting the best of both worlds, growth in bull markets and stability in bear markets. So you're enjoying the crazy growth that Bitcoin and Ethereum is having, and with the same stability and security as gold, right? So in price performance, that starts opening up other benefits. But also it starts opening up other benefits in the loans, right? This is a new, first of its kind advantage or feature that I'm going to explain to you right now. Since it's new, it's a little bit confusing, but bear with me. So now we know that in Valinity right now, you're able to collateralize your tokens and get a loan in Ethereum. But let's say in the future, you're able to now get loans in different kind of assets. Right now, I just put the LTV, the loan to value, all equal in $1. This is the amount of, in today's price, 29 of December of 2020. This is the amount of Ethereum that equals $1. Bitcoin that equals $1. This is the amount of Ethereum that equals $1, and the amount of gold that equals $1, right? So let's say you have your V, you have it in your wallet, and you want to take a loan in Bitcoin. So you collateralize your Valinity, and the ecosystem gives you this amount of Bitcoin, right? Which has a value of $1 in this example right now, right? But we know that these assets fluctuate, right? So let's just give an example, an extreme example, just to get the point across, that Bitcoin drops 50%. It means that this value of Bitcoin is not now worth $1, it's worth now 50 cents. What does that mean? That means that your debt just dropped 50%. Because what you owe to the ecosystem is this amount of Bitcoin, not the value. You owe is the value of the amount of Bitcoin, right? So now your debt dropped to 50 cents. What are you able to do? What is an opportunity that you're able to do? Is that you're able to actually now go to the market, right? You're able to go to the market, buy this amount of Bitcoin, which is going to cost you 50 cents, right? Pay it back. You get back your Valinity, right? Because now you already paid back the loan. You get it back to your wallet. And now you take it to another asset that is a higher appreciation, which is gold. Gold sustained its price in this scenario. So Bitcoin dropped 50%. And gold sustained its price like it usually does. So you're able to get this amount of gold, send it to your wallet, which now you get another $1. What did you end up doing? You ended up switching your debt that costed you 50 cents and now you got $1, you were able to get the difference. So now you just generated another 50 cents per token without having to sell. Now adding the dollar that you got at the beginning, now you've been able to get, in this case scenario, $1.50 without having to sell. You just generated more liquidity without having to sell, right? Now, let's just give the last example. Let's talk about a bull market and Ethereum jumps up. You do the same thing. Let's just say it did it times 2. So now this amount of Ethereum is worth $2. So now you do the same thing. You buy this amount of gold in the market. It's going to cost you $1. You pay it back. You get back your Valinity. You get your Valinity and collateralize it. But now you get Ethereum as a loan. You get these $2. You just made another $1, right? So this is going to give you the ability to now continuously generate more liquidity. Meanwhile, the market fluctuates, and get more liquidity without having to sell, right? Now, keep in mind that meanwhile you have these loans open, you are paying interest, a 1% interest fee. So you are taking risk if the market just stays still. You're just burning Valinity because you're being charged that 1% Valinity. That is benefiting the whole ecosystem, but you are paying it. So just keep that in mind. Now, these loans, either the loans that you get right away by collateralizing your V, refinancing, and switching your loans from one debt to the other, all this is generating liquidity for the holder without having to sell. What does that create? That creates much less selling pressure that positively, directly impacts also the price of Valinity. That it brings us to the first main advantage is price performance as well. Okay, so now let's talk about how can you access the ecosystem. Now we have a application already available in the App Store and Google Play. It's 100% decentralized. It's 100% non-custodial wallet, right? And in this wallet, you can connect directly to Uniswap, which is the world's biggest decentralized exchange, to buy and sell V. And then you can connect to our ecosystem to get loans and manage your loans as well, right? But if you want to use your own wallet, there's no problem. You can simply come to Valinity.io and launch our dApp. You launch our dApp by clicking Open Loan, and you'll see the dApp page come up. This is Spanish. Give me a second. Move it to English. So now you can connect wallet through any browser wallet like MetaMask or any other wallet that supports Wallet Connect. But I do personally recommend you to download the Valinity app just for a better user experience. When you connect to our dApp, you'll be able to see the current Valinity price in the market and the amount of Ethereum that you're able to get as a loan, the LTV, right? And here, you're able to manage your loan. So when you have a loan open, you'll be able to click here and manage it. Now, to open a loan, you go to the collateral loan page, and you'll be able to see what when you get a loan, what happens. You are collateralizing your V in the collateral treasury, and you're getting a loan from the Valinity Reserve Treasury. Here it shows you how much you'll be getting from each V. And it will show you the advantages of this loan. The first advantage, as we spoke about, unlimited refinancing. Meanwhile, the ecosystem keeps on acquiring more and more ETH. You'll be able to refinance and access more liquidity. Also, the interest that you are charged, this interest is directly taken out of circulation and used to acquire more Ethereum. So it just goes directly to the valorization of our token. And the biggest advantage, what we are most proud of, is that the first ecosystem that you are going to be able to enjoy your liquidity without the risk of margin calls or due dates, right? So then you just open here, depending how many Valinities you are going to collateralize, that's the amount of Ethereum that you'll get as a loan, and press 2 buttons, and how long it takes for a block to go on the Ethereum network. You have your Ethereums in your wallet, and you have your open loan that you'll be able to manage, right? Now we also have the stats page which I'm really also very proud of. This stat page gives you on-chain data. Remember, I come from public companies investing in the stock market, and one of the great things that I liked about the stock market is that you'll be able to get quarterly reports on how the company are doing. So we created this stats page so you're able to see exactly how the ecosystem is doing. So for right now, you can see that Valinity has been able to generate $6.3 million. It breaks it down how much and how has been able to generate that 6.3. $4.9 million has been in the assets acquired right now, which has been Ethereum. We've been able to acquire 1,449 Ethereums. The interest from loans, we've been able to generate $1.2 million in loans and interest from loans and in transaction fees. You're able to see how many shareholders or token holders there is right now of the ecosystem. You can see the value of our reserve, because of course our reserve is in Ethereum, so it's going to fluctuate. Soon it'll be also in Ethereum, Bitcoin, and gold. You're able to see how many loans are out, how much of our reserve is loaned right now, the collateral that we hold, the V that we hold for those loans, how much we generated in interest in the current month, and how much we've been able to generate in total. These are the trades executed on the exchange. Remember, every time that users buy and sell the coin, there's a 2% fee that profit for the ecosystem, and also when users transfer from one wallet to the other, also has that 2% fee that generates revenue for the ecosystem. So the point of it is that you hold in Valinity, you're a complete shareholder, a co-owner of this decentralized ecosystem, and you're able to access all this data. Also, a really neat thing is that if you want to see how the ecosystem performed a certain month, you're able to click in that month that you want to see, and you'll be able to see exactly how the ecosystem performed in that given month. So the amount of asset that acquired, the interest was generated, transaction fees, the value of the reserve at that time, etc., etc. Right? So now that we know how the ecosystem works, right? We know the tokenomics, we know the advantages, we know how to use the application. I think the biggest thing is, how can we trust Valinity? With so many scams, with so many things that's been happening on crypto, how can we trust Valinity? First of all, what I always say is trust the smart contracts. Trust that these smart contracts, look at it, review it. The point of the blockchain is to be a trustless ecosystem, that you don't have to trust anyone. You are trusting open code. So the first thing is that you're trusting Ethereum, and you're trusting the Ethereum smart contracts, right? Now, but who created those smart contracts? Who created the whole ecosystem? It's a company called Iterate. When we started this venture, we actually reached out to Hedera Hashgraph, HBAR, which is, for those people that don't know, Google them. There is a very big blockchain backed by the biggest companies in the world, like Google, IBM, etc. And we wanted to know which ones were their best developers, and they referred us to Iterate. Iterate is a development team based out of California who has developed the Valinity and developed also other big name projects. And their CEO is they're led by a former NASA engineer who is the CEO of Iterate, who was a NASA engineer and now specializes in blockchain technology. After we finished developing, we wanted to make sure that our ecosystem was as safe as possible. So what we did is that we went to CoinMarketCap and we searched at the biggest projects out there. Of course, Bitcoin and Ethereum, we couldn't find any audits, right? Because they're the biggest, they're the first ones. But if you go to USDT, which is the biggest stable coin out there, under audits, you're able to see this company called Certec, right? You're able to see this company called Certec. Also, XRP, very big project as well. You're able to see the audits, also Certec, and Binance Chain, which is the chain of Binance, the biggest exchange in the world, Certec. Also, Crypto.com. I could show you that Certec is the biggest auditing firm in the world that audits the biggest Web3 projects. And if you go to Certec, you're able to come and see, and you'll be able to see Valinity, right? I want you to see this category, these scores that USDT has compared to Valinity. See, Valinity has a much bigger score for the simple reason that Valinity's is 100% based on those 3 smart contracts. One that mints the token, one that holds the reserve, and one that holds the Valinity as collateral. And those 3 smart contracts have been audited and locked. So they only have that function, and that's why Valinity is in the top 10% in security by Certec, which is the world's biggest auditing firm, right? Not only that we're in the top 10% of security because our whole ecosystem is 100% decentralized, you can verify that all of our smart contracts have been audited by them, that they function exactly how we designed them to function, and are also locked and cannot be changed, right? Also, we have a whole KYC. This KYC is that they did a full in-depth audit of me, my founding team, and the development company to make sure that everything is up to date, that we have no issues. You can check out this KYC here in Certec. Also, we have different audits within not only our smart contracts, but also our application. And there's Valinity formal verification audit, which is my personal favorite audit, is that this audit guarantees you that the amount of asset that's backing each Valinity token can never go down. It can only go up. So you can come to Certec, come to Valinity formal verification, click view PDF, and you'll be able to see that this audit, read it in depth, and the conclusion is that the amount of Ethereum that's backing each token right now can only go up, can only stay the same or go up through each single transaction. That's how the ecosystem was designed, and it's locked to that, right? Now keep in mind that floor is in Ethereum. So of course, if Ethereum goes down, the value of that floor goes down. But if Ethereum goes up, also the value of that floor goes up. So keep in mind that audit is in asset. That floor price can only go up, right? So now we can see that the whole ecosystem has been audited. We also see that we have a $150,000 bug bounty that they have logged, so they're continuously seeing if there's any flaws in our ecosystem, etc. Right? So now, after our ecosystem is not only developed by one of the best teams in the world, but is audited by the #1 firm in the world, our ecosystem is also, our tokenomics are also patented. Why is this so important? Is that, for example, for me, every project out there, 95%, to not say every, is a copy of Bitcoin or Ethereum. So all the meme coins are just a copy of Bitcoin, and all the other networks are just a copy of Ethereum. If Bitcoin, for an example, imaginary, it was patented, right? It means that it will be much harder for those meme coins to grow, and all that value will be probably into the market cap of Bitcoin. Imagine the price of Bitcoin, right? We bring all that value of all these meme coins inside Bitcoin. Same thing with Ethereum. So for example, BNB is just a fork of Ethereum. It's just a copy of Ethereum. If Ethereum was patented, all this value will be in Ethereum. Imagine the price of Ethereum, right? So since Valinity is the first of its kind, we patent the tokenomics. It's already the US patent. We're already filed for the world patent to make sure that most of the value of this kind of protocol is in Valinity and benefits directly our community. Of course, there's going to be copycats, but they're not going to be able to grow as much. So that's the advantage of being patented. Also, let's talk about Paxos. Paxos, for those people that don't know, Paxos are the issuers of PayPal USD, BUSD, and they're the issuers of this token called PaxG. It's very important for this token. Let's go to CoinMarketCap and look at PaxG. And what this token is backed by 1-to-1, 1 ounce of gold, right? You can also see that's audited by Certec right here. It's a huge project. It's already worth over $500 million market cap. And this project is just being able to hold gold in the Ethereum blockchain. So that's how Valinity is going to start acquiring gold and put it in our reserve. Is because we're going to be able to start acquiring this token and put it in our reserve. And that's how our ecosystem is not only going to be backed by Ethereum, also through Bitcoin, through wrapped Bitcoin. For those people that don't know about wrapped Bitcoin, you can Google it, wrapped Bitcoin. And it's basically Bitcoin on the Ethereum network, right? Let's go back to PaxG. So PaxG are the creators of Paxos is the creator of PaxG, PayPal USD, BUSD, and what they actually are is a institution, a regulated institution, regulated by the New York State Department of Financial Services, Monetary Authority of Singapore, and Abu Dhabi, that they hold all the physical gold that backs their PaxG. They hold all the USD equivalents that back a PayPal US dollar and their other stable coins. Paxos board of members is made up of very interesting people, like a former U.S. Senator of New Jersey, former U.S. Commodity Future Trading Commission chairman, head of Vanguard, head of BlackRock, etc. So when you see what Paxos is a very elite institutional grade Web3 company. And our developers actually opened the doors to us, to Paxos, so we can start acquiring their coin in our ecosystem. And also they reviewed our project. They love it. They love the tokenomics that they created. And we're working towards hopefully announcing a public partnership as soon as Valinity gets to certain metrics. All right. So that's talking about security. How can we trust this project? One, it's 100% decentralized, right? Let's trust those smart contracts. Second, built by a great development firm based out of California, and audited by the #1 auditing firm in the world, Certec, and ranked in the top 10% for security and potential. Also patented tokenomics, and also in the eyes of one of the biggest institutions in the world, which is Paxos, right? Now, I think we've covered everything. We covered from the tokenomics, the advantages, security. Let's talk about risks. I almost forgot risks. What is the risk of Valinity? Right now, the risk of Valinity is 100% Ethereum, since our reserve is created of Ethereum. If Ethereum drops in value, of course, Valinity is going to drop in value. And if Ethereum goes up in value, we also go up in value. This is the worst case scenario of Valinity. Valinity will never go under this evaluation. The reason for that is because when this assets or this Ethereum goes into the ecosystem, it cannot leave. It's either sitting in our reserve in physical Ethereum, or is loaned out but still in our books, and we have the collateral for it. And the only way that these coins can be sold in the market is that those users would have to return that Ethereum. So this Ethereum is the worst case scenario of the valorization of the company, of the valorization of the project, right? Which is represented by coin by this amount. So the risk is the difference of what you bought it at and the amount of Ethereum's backing it, right? But keep in mind, if the Ethereum drops, we drop. If Ethereum goes up, we also go up. So right now, the risk is Ethereum. When we open up the ecosystem to start acquiring now Bitcoin, Ethereum, and gold, now our risk is the fluctuation of Bitcoin, Ethereum, and gold. And in the future, if our community wants to start acquiring another asset, it does so through a governance vote. And 70% of the governance vote has to pass through, and then the ecosystem will start acquiring that asset that we voted for. So this decentralized community portfolio will start now acquiring that asset. For example, let's say XRP or HBAR itself or Cardano or any other asset. So imagine now a portfolio that only buys. It's a portfolio that only continuously buys through every transaction fee, interest from loans, capital inflow. It just buys, and holds and never sells, right? Because it's impossible for this assets to leave the ecosystem. So that is the risk, and that's how you measure your risks. Now I want to speak a little bit about the longevity of Valinity. How long it's been around, since when it started. Tell you a little bit of the backstory of how Valinity got started. You can go to the roadmap. You'll see that we started working on Valinity in 2019. I was heavily invested in the stock market before COVID hit. My whole portfolio went completely to zero. So in that big emotional shock and from losing everything in a very short period of time, I was already starting to learn a little bit about crypto. And I realized that the biggest value that crypto and blockchain brought to the world was decentralization and transparency. So I knew there had to be a way to use what I was learning about cryptocurrency and using the decentralization and transparency to create an asset that doesn't matter what happens, doesn't matter another COVID pandemic or war, doesn't matter anything, it wouldn't drop below a certain price. So remember how the dollar used to be backed by the gold, and it's the same thing. Valinity is backed by these assets that we believe in, which is Ethereum, Bitcoin, and gold, but much better because every single transaction is just generating more and more of those assets to back our token. So that's a little bit of backstory of how Valinity came to be. Now, after we finished developing the tokenomics, we got in contact with Iterate and started working on the first versions in 2021. We started working on the first versions in the BEP20 network because the transaction fees are much cheaper and it's a much faster network. So we wanted to do all the versions of it. Actually, right now, we're in like version 4 of Valinity, and we're going to go to our final version fairly soon. So how do we verify this information? So we actually can see, we're going to go to Valinity, and we're going to be able to go here to Dex Screener. The Dex Screener is basically a decentralized screener that scans the whole blockchain, and where you're able to see every single transaction, buy, sells, liquidity, all this. Keep in mind that all this is before our launch, so that's why we have such low trading volume, what you're seeing in this video. But we publicly announced what is the company account. Is this account BE4. We can follow and track this account. Let's just copy the wallet, BE4 right here. Let's copy the wallet and let's go to the Binance chain, Binance scan chain, and paste the wallet. And we're able to see its first transactions. Let's go to token transfers. Let's go to view all. And let's go to the last transaction. And we see this coin called MFC, right? So this is the first version of Valinity, but instead of being backed by Ethereum, it was backed by BUSD, which was the Binance coin at that time, the dollar. And the reason for that is because in this time we were in the middle of the bear market and we didn't want to start accumulating crypto knowing that the bear market was coming or was in the middle of the bear market. So we just started accumulating BUSD in this first version. And MFC was actually up to like 3 versions until we moved to the Ethereum network. You can actually even go to the Valinity Certec audits and you'll see here MFC token and some audits. You can also go to YouTube and watch it. Basically, MFC is the same thing as Valinity. It was just backed by BUSD and it was the first phases of the project, right? So it's very important to show that not only that Valinity is this great one of its kind tokenomics built by a great team, audited by the #1 auditing firm in the world, Patent Tokenomics, talks already with a big institutional grade company, but also it has longevity. This is not a project that just started this bull run. This is something that has over 5 years in the making and $1 million invested in it. Now I want to talk about Dex Screener a little bit. This is a website where you can see all the transactions of any project in the world. I prefer Dex Screener over CoinMarketCap or CoinGecko because it gives you just much more information. I'm gonna make videos teaching people how to use Dex Screener. But one thing I want to speak about is that here you can see buyers, sellers, quantities, and holders. You're also able to see how many holders there are. Here you're going to be able to see the first one that holds 81%, 82%. But when you click on the Explorer and you go see what it is, this is the Valinity smart contract, the collateral treasury that holds all the Valinity for the collateral loans. So this wallet is not a user, is one of the smart contracts that we have in our ecosystem. And the second one is also a smart contract. This is the acquisition treasury that mints the Valinity and also receives all the interest and transaction fee in the Valinity. You can see it here. This is one of the wallets, one of the smart contracts that we've already shown. We can also see it here, E96. How do we verify that every time that buy and sell, traders buy and sell, that 2% goes there? We can do so through Dex Screener. So for example, let's go to this buy. We are able to see that when there's a buy, 98% goes to the holder and 2% goes to E96, right? So every time users buy and sell, for example, here when the company sold, you'll see that 2% of that goes to E96, right? So that's why I love Dex Screener, because it's much more transparent, is what the blockchain is supposed to be. It gives you much more information. Before we move on from Dex Screener, I would love to talk a little bit more about company account, which is BE4, right? We all saw that this is the wallet, first wallet to start minting Valinity. This is a company account, and we all can see the transactions from here. This is the best thing about Dex Screener, that is very transparent and decentralized. We can see all the sales of the company and the buys as well. We personally truly believe in the project, and we try to get as much V as possible, but we do sell to pay for development, to pay for audits, pay for marketing. So when you see the Valinity, this account selling, is because we are getting funds to pay for more development, pay for another audit, or for marketing, or etc. Right? So this is great to talk about for two reasons. Usually, when a project, the founder or the founding team starts selling, that's when usually the project dies, right? Because they have so much percentage of the circulating supply that when they go to the market and they sell, they take out all the liquidity from the project and the project dies. But remember that Valinity has this floor price. So right now the floor price is around 39 cents, and we can see that the floor price is here. So we know that it cannot go under that. So when the company account starts selling, that everyone can see, it's a public account, that it will start selling to get funds for marketing, development, to keep growing the ecosystem, to keep growing the platform, we can see that it creates a great opportunity. So instead of other projects that they do pump and dumps, right? Valinity is the first and only ecosystem that actually does a dump and pump, right? So we actually done various of those. Here we did one that the ecosystem that we started selling, right, to generate funds for development, and it got really close to the floor price. So the market took advantage of it and got Valinity at a very low risk, and then it pumped it right back up within 1 day, right? We actually did that with a influencer called Crypto Crow. You guys can go to his channel and actually see that video when we did a public dump and pump, right? We're also doing that right now since we are getting ready for marketing and go to the market. We did one in 23rd of December, and right now we are still getting funds for getting ready for this huge launch. So it gives a great opportunity, because it gives a great opportunity for new users to get into the platform at a closer percentage to the floor price, taking less risks, and it also gives the opportunity for people that have already been in the platform to acquire more and more Valinity. So that's something I wanted to point out as well before we move on to out of deck screener. Like I said, I will be doing more videos teaching the community how to use this. But in fact, we still are like in CoinGecko. So for example, if we go to CoinGecko, we can go to Valinity and we'll be able to see that we're there. There's something I wanted to talk about CoinGecko. CoinGecko automatically shows up this caution. It says that the creator can make changes to the token contract, etc. But I invite you to please click on this link so you can get more data. That message is an automatic message that CoinGecko does every time that it has a call to attention, right? But as you can see, it has 0 risks. It only has 3 attentions, right? What are the 3 attentions? Well, you see here that the contract source is verified, no proxy, no functions to the ownership, and we cannot change balance. What are these 3 attention calls? The first one is that the coin is mintable, and it's only mintable by that one smart contract that I already talked about, the Valinity Acquisition Treasury. Also, that in the blockchain is a hidden owner. I'm publicly known as the creator and the owner, Sergio Solano, CEO and founder and creator of Valinity. So this is just hidden in the smart contracts, which makes no difference. And the third and final call to intention is that the tax is modifiable. So we wanted to see what was the perfect point to have that percentage fee. We wanted not to be too high that people wouldn't be encouraged to buy and sell, and we didn't want to have it too low, because if it's too low, then it wouldn't benefit the ecosystem so much. So we found that 2% was that perfect sweet spot, that it will still motivate traders to buy and sell the token, but at the same time it will generate enough transaction fees that will benefit the ecosystem. So please, if you see this, click on it and learn a little bit more. Don't get spooked by this. This is an automatic message as long as something comes up, but click on it and you'll get more information. There's also one thing I want to talk about, is that we are not on CoinMarketCap. The reason that we're not on CoinMarketCap, because like I said, this is not the final version. The final version is in development right now, and hopefully will be done out and soon. And since that's gonna be a completely new ecosystem, we didn't want to just do the whole process with CoinMarketCap again. All right, so I wanted to point those things out. Website, you can click on these links. It's a WhatsApp link that connects you directly to the founding team to answer any questions or concerns and help you with the application, how to buy, how to sell, how to get a loans. You can connect us through there. Please make sure that you're accessing Valinity through Valinity.io. There's already a lot of scams out there. Please be very careful. This is still Web3. They're going to try as much as they can to scam you, but don't let them get a hold of your hard-earned money. Make sure you're looking at the details, right? Also, if you haven't done so, watch this video. This is the uncut video. Explains Valinity in a little bit shorter format, and how to use the Valinity app. It just gives you the step-by-step, exactly how we done in this video as well. Also, I recommend you to watch this interview format video where I answer the most frequently asked questions of the ecosystem. So now remember what Valinity is. Valinity is the continuation of the blockchain and cryptocurrencies, right? First we had Bitcoin, right? That brought decentralization and transparency to the world, which to me, that's the true value of Bitcoin. Not $10,000, not $100,000, not $1 million, not 10 million. That's why Bitcoin is going to always grow in value, because its true value is decentralization, transparency, and limit supply, right? And then Ethereum brought what is open code, a creation of this decentralized server to create applications on it. And Valinity is the use of those decentralized servers to keep the same fundamentals of what is great about cryptocurrency, which is decentralization and transparency, to create an application which is what DeFi is truly meant to be. This is what decentralized finance is supposed to be. An ecosystem that benefits all of us equally, ecosystem that's 100% decentralized, right? Something that's going to replace this flawed financial system that we are all living in. First of all, if you sticked around all the way to the end, congratulations. I know it's hard nowadays to keep focused for so long. I know if you've gone this far, you can see the great opportunity that we have here. It's not only enough to buy the token, also share this video with anyone that you think might be interested, anyone that's already tired of this whole meme coins and taking risks in the market and want to invest in a true fundamental project like Valinity. Please subscribe to our YouTube channel and click on the bell notification, since we're going to be continuously coming out with content and updates about the ecosystem, and it's very important that you stay to update and get the information as fast as possible so that you can react as fast as possible. Thank you very much. Please leave your comments. I would love to know how I could make these videos much better. And don't forget that through this links, you can also book a call directly with me to ask me more questions or talk about the different strategies about the Valinity ecosystem. Thank you very much.